Hi everyone and welcome. I'm Mike Werner and today we're going to be taking a look at the bank reconciliation. The bank reconciliation compares our cash balance on our books to the bank's balance. Then what we try to do is determine what those differences are item by item. Before we get started, it might be a good idea for you to take a screenshot of this page. It's the form that we're going to be using to complete the bank reconciliation, and then print it out so you can have it available as you view the video. Before we get started, there are a number of documents that we should have on hand in order to do the bank reconciliation. First of all, we're going to need the prior month's bank reconciliation. That's the bank reconciliation we did last month for the company. We're also going to need a copy of the bank statement for the current month, and we're going to need the cash records for our company, which would include the general ledger and perhaps some journals if additional detail is required. Here's another document that you may want to print out so that you can have it handy as you view the video. Here's a copy of the bank statement. Take a screenshot of this one too and print it out. And finally, here's a copy of the general ledger. So take a screenshot of this one and print it out also so that you've got it handy as you're viewing the video. Here's the company's general ledger. The company has a cash balance of $29,110. Here's the bank statement, and we see that the bank statement has a balance of just $28,896. What makes up the difference between these two amounts? Well, that's exactly what we hope to answer as we prepare the bank reconciliation. A bank reconciliation lists all the differences between the bank's balance in cash and our balance in cash. So to do the bank reconciliation, we begin with last month's bank reconciliation. This is the bank reconciliation for February, and this is the bank statement as of March 31st. So last month was February, and here is the bank reconciliation that we prepared for that month. Cash balance in the bank and the cash balance on our books, of course, didn't match, and therefore we had a bunch of these differences. Each one of these differences is called a reconciling item. So what we've got to do is make sure that all of these differences or reconciling items have been taken care of. The bank section of the bank reconciliation in our form appears at the top, and the company section of the bank reconciliation appears down here at the bottom. So let's begin at the top. Let's see if the bank recorded these reconciling items. We begin with this deposit in transit. A deposit in transit is a cash deposit that the company has recorded, but it has not yet appeared on the bank statement. So they made this deposit on February 27th, but when they looked at February's bank statement, it did not appear. So we include it as a reconciling item here on the bank reconciliation. So let's see if that amount finally was deposited in the bank. $200. Let's take a look. Oh yeah, there it is. There it is. So let me check it off. And when I check it off, I want to make sure that I check it off in both places. That would be here on the bank statement, and over here. You notice I'm being pretty careful to check these things off, because if they're checked off and we check them off in both places, then we do not have to worry about those items again. Any items that do not have check marks, by the time we're done, if there's an item that does not have a check mark, it becomes a reconciling item for the current month's bank reconciliation. So we've got to be careful with these. The next thing that we had are outstanding checks. These are checks that the company has written, but they have not yet cleared the bank. That is, the money has not come out of the bank account yet. So let's see what we've got. We've got check number 95 for $50, and let's see if that was, that one has not cleared the bank yet. It has not been deducted yet, so we don't want to put a check mark next to that one. Then we have check number 98 for $300. Let's check that. Oh yeah, here we go. Check number 98 for $300. It has cleared the bank. The money did come out of our account. So let's go ahead and check that off in both places. Okay, so we've pretty much done the bank's part of our prior month's bank reconciliation. So now let's move on to our company's cash records. Okay, so now we present the company's general ledger, which is the company's balance in cash, which are the company's records for their cash balance of $29,110. And this general ledger shows the detail. If the detail is not included in the general ledger, then we would instead use journals, various journals that the company may have, such as the general journal, cash receipts journal, and the cash payments journal. This is a simplified example, so all of our transactions have been listed in the general ledger. So let's go ahead and take a look. The first is February interest received. So on February's bank statement, apparently we received interest of $20, but it was not recorded in February. So let's see if it was ever recorded on our books. Let's take a look. Oh yeah, interest received $20. There we go. So let's go ahead and check that off. We're going to check it off here. And of course, we're going to check it off here. So we check it off in both places. We're careful to do so. Now, anything else that we need to, that should have been added? Nope. Deductions. Well, we had a bank service charge. The bank charges a fee to do our banking. And in February, they charged a fee of $31. We did not record it in February, so let's see. Do we have? Oh yeah, here we go. Bank service charge, $31. We recorded it, but we recorded it in March. No problem, no problem. $31, $31. So we're making sure the amounts match. And then we had a NSF check, non-sufficient funds check. What happens in this situation is the company deposits a check that they received from perhaps a customer, but the customer does not have enough money in their bank account, and therefore the check bounces, or it is returned as an NSF check, and that money is taken back out of our bank account. We hadn't recorded that deduction from our books, so now let's see if the company ever recorded it. Let's see. Oh yeah, check 101. That's the that would be it. It's customer's check 101, which is the non-sufficient funds check. We did record that. So there we go. So on the bank reconciliation of the prior month, we've checked off, we've looked for every item, and we've checked off every single item. Oh yeah, no, except for one. This one right here, that $50. That one is on the bank side of the reconciliation. They never recorded it. So when we prepare the bank reconciliation for March, we're going to have to include this item on March's bank reconciliation. So next what we're going to do is compare the bank statement to our general ledger. So now I place the bank statement on the left side of the screen and the our company's general ledger on the right side. And what we're going to try to do is to match up each one of these items on, say, our general ledger to the items shown on the bank statement. And we'll check them off one by one, making sure that we place a check mark on each of the documents. Any items that aren't checked off will be reconciling items, which we'll include on our bank reconciliation. So let's get going. We can start with either document. I'm going to go ahead and start with our company records. So we've got a deposit of $10,000 made on March 1st. We look over here. Where is the $10,000? There it is, right there. So we've got a deposit of $10,000. So let's check that one off and check it off over here. I want to make sure we don't forget to check it off in both places. And then we've got a deposit for $20,000. We don't want to check it first. We want to look first, and there it is, $20,000. So we'll check it off again in both places. And then let's see, we've got a check 101 for $2,400. Where is it? Right here. Yeah, check 101 for $2,400. Let's check that off. And we'll check it off here. No problem. And then we've got check 102 for $15,000. Check 102 for $15,000. Notice the order of these items is not necessarily the same. You know, we record it on our books, and it may appear earlier or later than other items on the bank statement. Next is check 103 for $750. 103 for $750. So that item is on both places. This is looking great. This is looking great. And then we've got a deposit for $8,000. We got a deposit for $8,000. There it is. And so I want to check it off on both documents. We've got a deposit for $150. So okay, that one the bank doesn't have yet. So that would be what we call a deposit in transit. The company has made the deposit and they've sent it to the bank, but it hasn't been recorded by the bank yet. This was made late in March, so perhaps it'll appear in the first day or so of April's banking business. Let's continue on down the list, though. We've got check 104 for $90. Check, that's not there either. We've got check 105 for $1,500. Oh, that one is here. That one is here. Okay, check 105 did clear the bank, but check 104 apparently has not. Okay, check 106 for $500. Nope, not there. Check 107 for $300. Nope, it is also not included. So there you go. These two checks are outstanding. Now, are we done? No, we're not quite done. We've looked at the company's general ledger and sort of checked in this direction, moving this direction. But now we should look at the bank statement and see if any of the items on the bank statement are on the general ledger. In theory, there shouldn't be any, but who knows? Let's take a look. So we've got $32. That's a service charge made on the very last day of the month. Service charge, nope, not recorded on our books. And then we've got this NSF check. Oh no, another NSF check returned on the 31st. One of our customers gave us a check and they didn't have enough money in their account. So the bank originally would have deposited into our account in anticipation of getting the money from this customer's account. It turns out the customer did not have enough money in their bank account, so they take the money back out again. So there we go. So let's go ahead and look. No, we haven't recorded that either. And then we have interest of $28, interest of $28 that we received on, this balance that we've got. Nope, it hasn't been recorded either. So what we have here is we have a number of reconciling items. First of all, let me just show you this once more. We've got this one. This is going to be a reconciling item, the $50. So that one's going to be a reconciling item. And then we have on our general ledger, we've got this deposit in transit. The bank doesn't have it, so it's a deposit in transit. So we're going to have to add this to the bank's side. And then we have some checks, some outstanding checks, $90, $500, $300. These three outstanding checks have not cleared our bank account yet, but they will. So what we're going to do is on the bank side of the reconciliation, we will go ahead and deduct these three amounts as reconciling items. Now we look at the bank statement and we see that we've got the service charge, the NSF check, and the interest. All three of these items have not been recorded. Nope, not recorded on our books. On the company side of the bank reconciliation, we will go ahead and list these three items as reconciling items. We will add the interest, we'll deduct the service charge and the NSF check, and hopefully when we do that, we'll arrive at the correct cash balance. So let's go ahead and do that next. So now what we've got is the prior month's bank reconciliation and our new bank reconciliation form. And this is the same form that we showed at the beginning of the video that you may have printed out. So we're going to go ahead and look for reconciling items. So there's one right here, this one right here, this $50. And what a lot of people will do is they'll circle the amount. I really generally don't circle amounts like that because then later on, when they finally clear the bank, you've got the circle and you wonder what it means. So I just leave it with no check mark and, sort of train myself to look for those things. So we've got this outstanding check. It's number 95. So outstanding check number 95. And the dollar amount of this is $50. So let me go ahead and put that over here. And that's the only reconciling item I have to deal with. If I had any others, I would go ahead and list them. Now I'm looking at our general ledger. And most of these items have been checked off, but there are a couple. There's some deposits in transit. Let's see, where is that? There it is right there. On the 28th, on March 28th, there's a deposit for $150. So deposits in transit right up here. It's March 28th. An outstanding check for 100. What else do we have? Well, we've got this outstanding check number 104 for $90. We've got check number 106 is also outstanding for $500. We've got check number 107 also outstanding, 107 for $300. And so we got that, and that's it. That's these are the items that we've recorded on our books, but the bank didn't record them yet. So I went ahead and included them as reconciling items on the bank's side. While I've got this document out, I'm going to go ahead and enter our ending cash balance, per books. So it's $29,110. $29,110. So I've got that, and I've taken care of all these other reconciling items, so I think I'm done with this document. Let's move ahead. Okay, so here we've got our bank statement, and so let's take a look at that. We've got a number of items on the bank statement that we didn't record, And the first one we come to is the bank service charge. So bank service charge, and this one's even typed out here because we know we're going to get the service charge every month, at least generally we do. So let's go ahead and list that as $32. There we go, we got that. And then the NSF check. So we've got the NSF check. And we'll have to figure out, which customer gave us that check so we can hopefully get our money back. But the amount is $1,000. So let me list that. $1,000. So we got that. And then we've got interest that we received from the bank. So we've got, let's see, March interest. And that is, how much is it? $28. Okay, so while I've got the bank statement here, let me go ahead and enter the ending cash balance per the bank statement of $28,896. Let's see, $28,896. Now that I've got the cash balances per the bank account and per our books, and I've listed all the reconciling items, the bank's reconciling items and our reconciling items. The only thing I have to do is add it up. So let me go ahead and do that next. Okay, I've got my calculator here and ready. So I'm going to take the bank's cash balance of $28,896. I'm going to add to that the $150 and subtract the $940, and we arrive at a cash balance of $28,106. So let me go ahead and enter that for the correct balance for the bank. It's $28,106. Now let's do the same thing for the company's side. We've got a total of all the additions. There's only one of them, so it's 28. We've got a total of the deductions. We've got 32 plus the 1,000, so that's 1,032, and this is a deduction, so let me put brackets around it. And now using the calculator, let's start with a $29,110 cash balance per books. We're going to add the $28. We're going to subtract the $1,032. We end up with $28,106. $28,106. Now, the important question here do these amounts equal? Because the two amounts, they should equal. Oh, thank God they do. I mean, well, of course they do. Of course they do. That's what I meant. Of course they equal. So this is the bank reconciliation. We've just learned how to prepare it. And what's going to happen now? Well, these items will clear the bank eventually. You know, the deposit is going to arrive at the bank and will be recorded by the bank. These outstanding checks will also eventually clear the bank. At least that's the hope. This check number 95 for $50, that concerns me a little bit. Maybe the person lost the check, but we'll have to wait and see what happens there. But eventually, everybody who's got these checks will deposit them in their bank account, and the amount will come out of our account. And so eventually, these things will clear the bank. What about these items? Well, these items we haven't recorded. We actually didn't know about them until we did the bank reconciliation. Now we've got to go ahead and record them. In this last section of the video, we're going to go ahead and record these reconciling items on the books of the Collins Container Corporation. So I've got a general journal page here, and I'm just going to go through and go ahead and make these entries very quickly. Let's assume we do this on April 1st, which is April Fool's Day, right? 2020. So 2020, April 1st. Obviously, we would do this in black ink instead of red, but I want to use the red so that you can see what I'm doing, and it's a contrast to the form that I'm writing on. So let's see, the first one is the interest. So what we've got here is $28. It's increasing cash, so we're going to debit cash for the $28, and we're going to credit interest revenue for the $28. So we've got that one recorded. So let's see, we've got a bank service charge of $32. So we're going to be crediting cash because cash is being reduced. We're going to debit the bank service charge expense for, how much is it? $32. And then we're going to credit cash, because the amount is coming out of our cash account for the $32. And then we'll do the next one, which is the NSF check. So this person gave us a check that bounced. They owe us that money. They owe us the money. So I'm going to go ahead and put the amount in accounts receivable. And that is $1,000. We're also going to have to get our finance people to chase that person down, to track them down and get our $1,000. And we're going to credit cash, of course, because cash is being decreased by the $1,000. So we've got the three entries that we've recorded, and so next month when we do the bank reconciliation, we'll see them on our general ledger. We'll see each one of these, and they will not appear as reconciling items on the next bank reconciliation. If we do not record these, if we do not make entries for these things, then on next month's bank reconciliation, they will appear once more as reconciling items. Here are the two documents that I just did by hand, neatened up a little bit so that you can see them somewhat better. We've got the general journal entries that we made by hand just a moment ago, and we've got the bank reconciliation that we did by hand just a few minutes ago. And as you see, the corrected cash balance, it equals on the bank side and our book side. That means that we have accounted for every one of the reconciling items, or every one of the differences between the bank's balance and our company's cash balance. So this brings us to the end of our video. I'd like to thank you for tuning in. And if you found this video informative or helpful, please give it a thumbs up. So this is Mike Werner from Miami saying bye for now, and I'll see you in the next video.